Welcome to Charts This Week. My name is David Linton, I run Updata, and this week we're going to take a look at stock markets, oil, a number of things making new highs, and quite a lot of bullish charts at the moment. So we start with the US stock market, the S&P 500 index. This is the weekly cloud chart. This has been our roadmap really for the market. Remember, we had the sell signal in 2000, the buy signal in 2003, sell in late 2007, early 2008, and the end of last year we had the buy signal. It was late because the market had fallen so much. It dragged the price down. The cloud took time to react, but we are through the cloud on the weekly chart. And quite interesting, I've marked the Fibonacci numbers on here. Because of the way the cloud's constructed, the high and the low, the 50% mark, we're through that 50% retracement level. We've got a 61.8% at around 1250. So that's a retracement level where we might expect the market to go. We're nudging the 1200 mark on the S&P 500, so really looking bullish and new highs. And remember, as technical analysts, new highs are always good. And here we see the daily chart. The buy signal on this shorter term, medium term time frame was given in spring last year. It's been uphill ever since. We have again broken to these new highs, nudging the 1200 mark. This is a bullish chart. So US stock market really looking good, making new highs. And interestingly, I've done a seasonality chart here because a lot of people are now, questioning, should we sell in May? It's only a couple of weeks away. And here we see on the seasonality chart that we don't generally in the last few years, we haven't been falling in May. We've still gone up. June hasn't been a great month for the market, it's fair to say, but July and August have been all right. So in the last 10 years, it hasn't been so bad over the summer. We do tend still to get the autumn sell-off, and if we look at that, we can just drag the chart, we can see that September, October, we have had the sell-off. So the sell in May and go away, the jury's still out as to whether it's a good strategy to employ. And just another one to just quickly check is the on-balance volume chart, and we are making new highs on the volume with the price. So there is volume behind this move. The market is making new highs on volume. And if we look at the targets, 1130 was the target given off the low. That's been exceeded. Remember, that's bullish confirmation. 1270 is our next target, not too far from that 1250 61.8% retracement level. So the mid 1200s is looking like a reasonable target area for the market. If we look at oil made new highs last week as well, and that's really been great. We're through on the weekly chart and the price for the first time. This is the long-term chart. Remember, because of this dramatic move, the chart took time to react on both the sell and the buy signal very late. The daily chart's been better for oil, but here we see that we are now wandering back into this bullish territory. Again, the 50% retracement level is the same as the cloud top. It's the construction of the cloud that gives us that. So we would expect resistance at around $90 on oil. That's the sort of long-term resistance level. Through on the high, we see it here on the cloud chart. We're through on the high. We tested this resistance level in March. We broke through at the end of the month, and now we're in a sort of a new level where support of the previous levels of resistance might now well become support. And it's worth noting on this chart that the mid-70s, about 75, 77 later in the next few weeks, this is becoming the support area for oil. So if we fall through the mid-70s, then this daily chart, the uptrend would be over, but there's no signs of that happening yet. And if we look at the upside targets for oil, we've got 111, 109. We're wandering through the very long-term resistance now, as we would expect. So we've even got a target of 124 for oil, but it does look like oil will get through that $100 mark. And then what's most interesting is this, looking at the correlations for oil. So here we see that oil was very heavily correlated to the stock market last summer, and again, the correlation has crept right up from virtually no correlation at the start of the year to being very highly correlated again with the stock market this summer. So we're seeing a situation where stock market goes up, oil goes up, or vice versa, and that's a bit of an anathema because we've always associated that a high oil price would have a negative effect on the stock market, but it doesn't seem to be the case. It's quite highly correlated again. And if we look at the seasonality for oil, we see that we generally are strong on price in oil in April, May, June. This is the seasonality for the last 10 years. What's known as the summer driving season is kicking in again. We should expect oil to continue rising for the next few months based on the seasonal effects. And if we look at the on-balance volume, because this chart has been a little bit less bullish, it hasn't been making new highs while the price has, so there's a little bit of a concern, but the fact that we've got this seasonal effect, we've got upside targets, we're through on the cloud, it looks pretty bullish medium term. And then if we get to the shorter term chart for oil, on the 60-minute chart, so this is a short-term chart looking at days ahead. Remember, if you're thinking hours, you're thinking days ahead. This is a hourly chart, days ahead. We have got the cross here, so this is now bearish on the short term. We had the cross to the upside at the end of March where we broke to the upside on the cloud. We've broken back down through the cloud. It looks like oil will trade in the next few days and weeks maybe in the 80s area, so low 80s to high 80s. That's where the trading range tends to be, but we are bearish on the short term. And of course on the very short term, remember to keep an eye on your 1 minute point and figure targets. Nat gas, we are through on nat gas into bearish territory on the daily, but we have had a kick up in gas, and so the 60-minute charts are looking quite good. And in fact, if we just look at the most heavily traded areas in gas, we see that it tends to be the gas products that are very heavily traded in the OTC markets in Europe. And if we look at, say, the day-ahead charts, in fact, if we go to a May contract, the day ahead slightly more heavily traded, but we're here to see the May contract. We came through on the 60-minute chart around the end of March, and we're in a bullish phase. So quite interesting that gas products are now in short-term bullish mode, and really we've got support at around the 30 mark. That 30 level is pretty key for gas. And then if we look at power, you'll know that I've been very bearish on power in the short term. The hourly chart has been bearish pretty well all year, but we have had the cross on that hourly chart and a very dramatic rise in power. So here was the point where there was a short-term buying opportunity. It has run very quickly. We've run away from the cloud. Now it's 47 euros would be the sort of level which we would expect to see support if we do pull back in the price, which would be about a 50% retracement of this move. We're still daily chart is still bearish. We're just testing resistance on the cloud at the moment, but power short term is looking quite good, and the 1 minute point and figure targets again for this chart are the ones to watch. But power is looking bullish short term for the first time this year, so quite an interesting chart, but keep an eye on those short-term targets. Then last of all, we'll take a look at gold. Here we see that gold has been bearish. We've been below the cloud, but just in the last few days, gold has actually come back up through the cloud, so we're now bullish again, having risen into bullish territory. And quite a key fact is that we're now bullish on gold, and of course that wills me to want to see the point and figure targets. Just push the shift and T keys on your system. We see how we met the 1200 target. We've got a new upside target now of 1250 for gold, so it looks like there's about $80 upside there for gold to be meeting that target. That's it for this week. Until next week, happy charting. See you then.